Hello, trading has closed on December 23rd, 2021. We always start with our disclaimer. I guess I should really start by wishing everybody a Merry Christmas, Happy Holidays, Kwanzaa, Hanukkah, whatever it is. And we'll just do our disclaimer now. I was late with the Hanukkah. Anyway, this is my call for Monday, which would be, what is it, the 27th, I guess, right? Monday is the 27th. And remember, I can be completely wrong, and all trade should be at your own risk. I said that this was a stronger move yesterday than I was expecting. I said we should trade higher today. I didn't have anything that would make sense if the rally stopped at yesterday's close. And I said the next potential target that I had was it was a challenge of the old highs. It's not the same thing as saying we have the challenge today, but we did. We called for the pattern with the early low, and that's certainly it. And on Monday, we should have a pattern with the early low once again. Doesn't mean you won't gap up. This really is not one of my favorite patterns. You gap up, trade higher all day, give it all back right at the end. Close under all these highs, all these lows, negative stuff. Doesn't have to stay negative. If this is all tax related or something else, we'll just gap over this and continue on our merry way Monday. But if that's the real thing, moves right before the weekend tend to follow through, and then we'll keep on dropping, and we're not going to know that until Monday's open. Here was the daily pattern. MEJT, where we are rallying all day long. MEJT says this rally won't stick, that we're going to undercut that white line, and we did. Well, this is the weekly chart. In November, I pointed out bar 13 of the Marx combo sell signal could finish early, but today it finished with no ifs, ands, or buts. His signals haven't been that great lately, but they do mark an overextended condition. And even if we don't drop, which is what used to happen, at the very least, it's been reasonably accurate in calling a consolidation at this point, rather than a continuation of the rally. And if the overextended condition isn't worked off by consolidating, according to his work, we should drop. But if we're going to have a collapse, we should drop to 41.66.45 within 3 weeks. And I don't see that happening unless we have a news event of some kind. Of course, doesn't mean his stuff is right, but that's what it says. This is what we said we should lead to higher prices regardless of how we close. These are my calls for the patterns for next week. Well, this isn't the only count there, but I think it's the prettiest count. I'd like it to work. I don't always get what I like. It'd be a lot more convincing if we could undercut this low. But even though this week was a challenge, it hasn't been killed yet. And I'll keep this as my preferred count. I'll keep this as my preferred target. Of course, if it doesn't work, we know what our stop is. It's just over recent highs. But even if we do break recent highs, it's possible that it could be an expanded flat, but I would lose some of my enthusiasm for the count. Here is the question we have. Is this an imminent breakthrough, or have we made a double top? Well, once you sustainably trade under 44.95.12, then it's a double top. The breakthrough of this line didn't meet the marked sustainability criteria, called for a return to the line, but since we have returned to it, if we gap over this, we're not required to retrace again. In fact, when you break through it, even though it's unsustainable, his work says at some point you're going to break through this line and it'll stick. It doesn't say you won't have a drop first. Well, I have to get rid of this old count. I just can't make it work. This count works, but it certainly isn't the only count. We have an A, a B, and a C, with C exactly equal to A at today's high. So if we do drop from here, if it is a double top, you can explain it, which I couldn't do if we stopped yesterday. Just because you can explain it doesn't mean it's right. But if we do drop, there's the reasoning behind it. Monday's pattern has the early low. We could gap up. We gapped up, hit higher highs, and closed under all of them. Unless we gap and promptly overtake today's high, I think we'll see lower prices Monday regardless of how we close. Remember that this late move just before the weekend nearly always follows through. You could call this a wall. If it's a wall, we'll just reverse it immediately and gap over it. But I can't think of any reason to have panic selling at this point in the pattern. The market's rallying to new highs. To me, it looks like a turn down from resistance. If we were dropping all day and then had a move like that, I'd feel differently. In a Festivus miracle, the SPX rallied over 200 handles from this week's low to challenge the all-time high. The all-time high is natural resistance in a long rally too, but not through that level is bearish. And the low volume, very low volume, adds to the problem the bulls will need to overcome if they wish to continue the rally unabated. That pattern as well requires gapping over the highs for the rally to continue. The breakover to Mark's TD line didn't meet the sustainability criteria. We've already pulled back to the line. So if we are going to have a gap up Monday, it doesn't have to retrace. We do have a wave count compatible with a top, but it's not the only count. It works. We have a weekly combo sell, but those haven't always worked. Last week, there was a huge, and I mean huge, change in sentiment as the RIDEX fund saw large reductions in assets in bear and money market funds, accompanied by a huge increase in bull funds. The magnitude of the fund's reallocation shows a sharp increase in bullishness by the public. And these people don't have the best track record in the world. Doesn't mean they're wrong every time. If you have institutions also reallocating cash, they can both be right. But let's not forget the volume dried up. So this was a huge change in opinion of the public without the volume to accompany it, which means that the mutual funds, the institutions, don't share their enthusiasm. If the wall near the close was panic selling, we should have little trouble gapping over its high. If it was the real thing, it wouldn't take much in the way of follow-through to complete a double top. Bulls need to gap over today's high, or at least clear it quickly, or I think we see lower prices on Monday. I'm not going to predict if we get the gap or not, but this thing, I'll tell you, usually follows through. Sometimes tax considerations can mess these things up at the end of the year. So I'm not going to say if we're going to gap up or go down. But if we do go down, it's a big double top. And if we do go up, I don't think there's a lot more upside because the sentiment indicators don't go along with it. Anyway, happy holidays. Monday has the early low. The open's going to tell the story, I think, and that's today's call.